Good morning. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the NASDAQ 100, being recorded on Saturday, February the 28th at 9:30 a.m. Pacific Standard Time. Well, I actually have prepared my charts last night. So what I'm intending to present was a united view between the cash market, the futures market, and the ETF. So between the NDX, the NQ, and the triple Qs, all stand in agreement right now. And so how I've marked the charts as primary wave three being complete in all three. Now, that was ahead of knowing that we still had this tense situation going on in Iran, but before the US military actually started sending missiles and firing into Iran. And Iran's response, firing missiles into United Arab Emirates, into, I think, Bahrain, into Syria, into other areas, and also into Israel. So it is a joint effort by Israel and the United States to basically declare war on Iran, whether or not the current administration has sought or gotten approval for an act of war from the Congress. From the news that I'm reading, the leaders of the Congress, both the House and the Senate, and the leaders of the ranking and um, majority holders for all of the Senate and the House intelligence committees were made aware of the intent to start this action to overthrow the current regime um, on the start of Ramadan. So this is kind of like, I think it's like really, I think it's kind of it's a serious move. I think it's like what we're going to expect from the market, but I found it very interesting. It's like this all started amongst what other things are still hanging over the market to um, announce that I believe that the highs are in and that we're starting, in this case of the NASDAQ, a primary fourth wave correction, um, which ultimately should bring us back to the 2022 lows, if not larger, depending on how we want to count this. Now, what I want to get into is not necessarily just that this action has started, and I believe what's going to happen is that when the markets reopen in Globex tomorrow at 6 p.m. Eastern, that I think we're going to move lower unless this all resolves itself and stops before before tomorrow at 6 p.m. Eastern. That I don't see happening. In fact, I've also read articles that there's some that are saying this should be at least a multi-week, at least 2 weeks campaign to disrupt and get a regime change in Iran. Outside of that, folks, I'm not really sure. We don't know. I mean, Iran obviously has um, agreements with other governments, such as Russia, China, North Korea, I believe, that they will defend Iran's right to exist under the current regime or whatever. So we have no idea. I've not read or heard any responses that are coming from any of those countries or other countries that may actually side with Iran. Um, so it's kind of really bizarre. We have a lot of things going on. We still have a lot of things happening within our markets. I do think that on Friday, what I found very interesting on Friday, because it was an expiration, it was also the end of month expiration. So the week before, we had the normal February expiration, options expiration. But then on Friday was the 27th, the last trading day for the month of February. And so I believe it was a little bit larger. And I saw a lot of things happening within stocks. Now, the one thing I want to bring to everybody's attention, not that I don't think you're aware or not aware of this, I believe you are aware of it, that all of the underlying stocks, so all of the 100 stocks that sit in the NASDAQ 100, also have options that trade on those stocks. And with the options comes along gamma levels. They all have call walls, put walls, volatility triggers, large gamma positions throughout strikes. And they roll, of course, because it all depends on the expiration date. So I thought it's just very bizarre because I thought a lot of the moves that I saw yesterday, particularly pretty much like on the open, we got that downside move. That's what I was looking for. But then it suddenly stopped and they started to rally it and they weren't going to stop because of what I was seeing happening. In particular, like it was Google. What I saw start to happen also was happening a little bit in NVIDIA, then in Apple. But then suddenly that stopped and NVIDIA led the charge lower. And then Apple followed, AMD followed, AMAT followed, Broadcom followed, and just et cetera. What held up was Google. So I started to go and run through options in in a lot of those larger stocks, and particularly in NVIDIA, Apple, and Google. And I saw there was the strike. That's what they were going for. Not that like they were going for because they were going to make all this money. They were monetizing and adjusting positions to move forward with. And so they had levels that they were going to get to either monetize a position, get out of the position, which is also monetizing it, and be ready for the expiration that occurred yesterday. I particularly saw this in Google, where even for a while, even at the very beginning of the day, I thought, oh, they're going for 310. The February 310 calls and puts, that's where the largest open interest was. So to me, it's like dealers or whomever are like, well, I'm not gonna be taking all this stock in or being put all that stock, et cetera, et cetera. So they got there and monetized what they needed to. And so if you notice that also just where stocks closed and where they finished the extra hour or however long they trade until all the trading stops. I believe it's my time is 5 p.m. my time, so 8 p.m. Eastern. So you saw that pretty much everything came in below where it physically closed in the regular session. So that tells me they were selling. So it's like whatever you got out of, they no longer wanted. So they're trying to sell out the stock that they were going to get. So, but I just noticed that pretty much across the board that they were selling except for Microsoft. They bought Microsoft. That's interesting. So, but I think all that is just to adjust what they knew they were going to get through settlement on the options expiration. Now, what I want to present today is here we have this very serious situation, and I have no idea what the outcome is going to be. I know what they're hoping for, but this could escalate when we have basically Israel and Iran declaring war against Iran. That's essentially what we've done. Now, the globe is already putting out the word like, no, no, what are you doing? And so what could result from it? As I said before, I don't know if Russia has an agreement, a treaty agreement or whatever, an agreement with Iran to support them militarily. China, North Korea, other countries. So it's kind of interesting to see this begin now at the start of Ramadan, which is kind of, I don't know. It's yeah. When you have to think about this is the high holy day. Ramadan is a religious period of time for Muslim faith. And here we are, starting a war on the start of Ramadan. And it just strikes me. So again, I don't know what the reaction from the United States is going to be. We haven't heard from the leaders, although I think they are going to have a vote either on Monday or next week on whether they're going to grant uh, whether it's permission, whether it's just you're declaring war and we're backing you. We're saying yes to that. And so that will be interesting to see. Now, here's one thing that the market does not like. The market does not like uncertainty. And right now, that's what just has been injected in mass. We have the uncertainty of what's going to be the outcome here. We have the uncertainty as to where and how can it spread. We've already seen that Iran has lobbed missiles into United Arab Emirates, and I believe Bahrain, and probably Syria, and definitely Israel. So are they going to start targeting our fleets that are sitting in the Mediterranean or sitting closer? Are they going to start aiming towards troops that have been moved into, I think, several other countries within the Middle East? I know that they're already sending missiles into Israel. If they're having any success, I don't know. But the goal is for regime change. The goal is, according to our president, now's your opportunity. You guys got to do this. You have to go do it, and get that regime change, kick them out, replace them. And it's like, wow, you just think it's that easy? I'm kind of, I knew the threat was always there, and I knew that they likely were going to do what they're doing. You don't amass this huge military presence surrounding a particular country just because the cost of doing that is insurmountable. And it's just incredibly high to shift all of that military over to the region and to keep them there. So I have no idea what the fallout's going to be, folks, but I want to tell you that I believe that prior to this, that just with everything else that's hanging out, I thought the markets were really preparing for a stronger drop. That's kind of where I want to start. So I'm going to start here on the NDX. And largest picture I have is that I've been monitoring a primary third wave. That primary third wave began in 2002 at the low, October low of 2002. And so what would primary wave three consist of is 5 waves of intermediate degree, of which I believe we've now completed. So I'm going to quickly just move this down to my 5-year weekly, and that's going to show you intermediate wave four completion point in October of 2022. So this has been in motion, and actually we could say that the high was reached in October of 2025. So basically 3 years. 3 years from the October 2022 low to the 2026 high or 2025 high. Now, that high was 26,182. I'm marking it a little bit differently. So here's our weekly, and we're coming up. We have 1, 2, 3, 4. I put the minor fifth wave in place. I put the minute fifth wave in place. I put everything in place all the way up to that primary degree. So now I'm going to come down to the daily, and I'm going to open it up so we can take a look inside, because this is where the differences do show. I still have this invalidation point. I still have the outside potential that the market is going to shift and this fourth wave is going to come over and somehow end over here and without falling through the floor. And then we're still going to have minute wave four and still have an entire minute wave five. That potential still sits out there. Now, divorce yourself from everything that's happening around us. Divorce yourself for one moment. I am just talking the actual, just doing the math and doing the counts. Nothing that's going to say to support that count or knock it out of the water. Because obviously what just happened this morning can knock it out of the water, obviously. So, but in essence, it's going to have to go a lot further than that invalidation point to knock it out of the water strongly. Okay. So right now that invalidation point is 23,000, 23,854. And so that is right there. 23,008, that's the low of this wave four. If it comes down and breaks that, well, first of all, it would invalidate this being wave one, as I was showing before, but I've already changed that. But also, it would set this apart. This would tell us, okay, that isn't the end of wave four, or if it is, we're coming down in that larger move. But if it's not, then the wave four could shift over to here. This becomes wave A, this becomes wave B, and we're in a C wave down. And the C wave down still projects, could get as low as 22,452. That's still going to be acceptable as a wave four. Now, that could be the way it's going to go. We get a strong downside reaction. It's not due to the fact that this is all done up to that primary third wave, but we're going to do it as an A, a B, and we're coming down as a C wave, and this fourth wave's here. And then what the result's going to be is a quick turn and a run to new all-time highs. That's an alternate. Now, I'm putting it differently because what I saw, what I believe was happening yesterday in that expiration, that they were preparing and taking care of the fact that they likely still, I believe, that we don't have protection underneath our markets in terms of uh, gamma. Now, there are levels that can be put into place where you see the market giving themselves downside protection, or just where we might be able to find support. Now, here we are in the NDX. Coming down, we kind of broke while we're getting ready. So we still have, depending, I have no idea where they're going to come in on Monday. I think this is where I saw a lot of change happening. Where, for example, at 24,800 in the NDX. We're still 160 points away from that. Can that be taken care of? Pretty easily. 24,000 remains big support right now. Why? Because it's the put wall. Why? Because the put wall is likely built on short puts. How short do they want to keep that position? Think about it. So was that they were getting out of that, or is it expiring, or has it expired? Have they rolled it? We won't know until I can get these numbers revised and new on Monday morning. So, but that's still existing. And my thought has always been, what's below 24,000? Well, from what I can tell, nothing. It's kind of like when we go over to the SPX, and if we broke 6,800, what was underneath 6,800? 6,000. Now, what I'm going to do also is I'm giving you the alternate to this. If anything, I could say that's my preferred. Why am I going to now call it my preferred? Because of the immense trouble the market has had holding or putting in a decent rally. If we still have upside, I can count this cleaner as 5 waves down. All right, now I'm going to break it down. We're going to go inside this thing and we're going to see what it looks like. Come on, get out of my way. I did. All right, so we're going to call this the 5 all the way up to primary wave 3. 1, 2, 3, 4, no overlap, and then a 5 down. 5 waves down. Now, a lot of people want to say, well, that's an A and that's a B. Really, then what's this? Right? That was a new low below wave 3. And it does count as 5. So what is it? After coming up here as 3, you get 5 down. It's either a 5th wave or you tell me. So I'm just thinking in terms of that, wave 1, and then I have an ABC up. That should actually go right to there. So I just sit and I look at this, I think like, the NASDAQ, the cash market is cleaner than the futures market, which has all these spikes and drives and all this other stuff going on, which clouds reality. So sometimes you see what, even when I'm giving my updates, I'll go and I'll flip it over to the line chart. Look at this. 1, 2, 3, 4, 5. Clean as can be looking at it. And what is this? ABC. Clean as can be when you look at it. Put it back into just the bar chart, and it just gets garbagey. Okay, so that's how I do my analysis. But so I'm thinking 1, 2. What is this? 1, 2. Maybe I'm thinking, in fact, what I was thinking yesterday, well, we might bounce a little bit on Monday morning. And I'm like, no, maybe not. Maybe we gap on Monday morning, hence putting in the margin for error to the downside. So this is like 1, 2, and where are we going to be? Where 3 would equal 1 as at 23,551. Gee, is that going to be so hard to get to? Maybe not. Maybe not, because we could see a situation just implode on itself, and where the market's like, that's it. We've had it. We're dealing with a bond market that can't do what it needs to do. Bitcoin, which just continues to drop through the floor, right? So these are the things that the market wants to tie their hopes to, right? Or why they're going to sell equities. Well, because of Bitcoin. I'm like, whatever, whatever. But that's what I see happening. Precious metals reversing and kind of heading higher here. But why, folks? What do precious metals really, those traders, they really don't like uncertainty. The uncertainty of what's happening around the world because of the potential for a lot of destructive behavior, not just in human beings, but in the markets. So what becomes that flight to safety? Gold. And by default, silver. And probably platinum as well, but all three. And I'll be updating those also later today. So again, back to the NASDAQ. Here's what we also saw yesterday. I've watched about the market having trouble. Now, we have sat through. We still have, I think, 1 or 2 more. We got AMD going to come on March 3rd. Now, either that's going to be the nail in the coffin, I don't know. But we have NVIDIA. So we've now got the Mag 7. They've all reported. NVIDIA was the last in the line. And initially, report those earnings. I believe it was on Wednesday. Reported those earnings. Stock flies up to 203, $203. Wow, great. But what happened immediately? Before you can say blink, it was trading at 198. Then it went down to 193. Then it brought it back to 198 coming into Thursday, coming into Friday. And they tried initially. Let's see if we can't get this back up, because obviously somebody needed a strike. It may have been 200. I don't know. So maybe they had the short puts. I don't know. I don't know. But here we have an NVIDIA. And initially it was holding 193 to 195, was holding. Then somebody walked in and pulled the plug, and the water just started to flood out of the pool. And so it just started to drop. And you could see it closed at 177.19. So they went through the strikes, folks. They went through the strikes. They went through 192, 190, 187.50, 185, 182.50, 180. And they were heading for 175. I believe that. I don't know. There might have been 178 or whatever. Now, you better get out of it if that was going to expire in an X amount of time. So they were just smashing gamma, smashing it in a panic to make their adjustments, because it went fast. We saw the same thing then turn in Apple. Apple was holding above 270, was holding above 272, 271, 273, 272, right? All up in there. And then suddenly pull the plug, and they hit 272. They hit 270. They hit 67.50. They hit everything coming down. And where did it end up? 264. And they sold it after the bell. So interesting day and what we saw as far as a turn. Now, Were they doing that because someone had heard or who didn't want to have anything over the weekend if this war was going to start? Well, possibly. I don't know. But then again, here we are watching this. And it's what I thought pretty serious. And I thought the message was clear. They were making adjustments because what they didn't want coming out of this expiration, they didn't want it moving forward. And if they were moving forward with the thought that we were not going to go up, but we were going to gap lower, I put the more intense pressure on getting those changes done. Now, it could have all been options related. It could have been all expiration related. And we come in on tomorrow and it's like, well, wash more, and they take the market higher. That would be a surprise, but not impossible, folks. We've seen stranger things, algorithms. Hey guys, did you kind of plug in the war? Maybe, maybe not. I don't know. So what I can go on is what I'm seeing and what I think may be happening. And here's the markers for it. If I'm going to leave that third there, and we're coming down in the beginning stages. First of all, let's fill in some blanks. I'm going to go back out here, and what we need to do is I need to go all the way back out here because I got to put it all the way in. We're going to go to primary wave 4. And I've done this before, but let's just see. I'm going to March. Nope, we're not in March. I got to put it in February. I'm going to go there and I'm going to bring it all the way back down and find it. And there it is. See, not bad, not bad. I'm going to take that and put it up here. I think that should be it. Let me go one more time out to my daily. And where is it? It's not. I need to move it up. And let's move it up to here. There we go. Now, so this is our first look, and this is in the primary degree. So I'm going to put it out there in the primary degree. So we're looking at what we think can happen in the primary fourth wave. I got 3825618. I'm going to leave that up there. 1.618, 2.6. I'm going to leave that. I'm going to leave it to here. But these are our initial wave patterns. 1.618 is not going to work. So let me go back down. Let me go over to this. I got to go edit, take that off. Okay, there. So you can see plane 382 brings us down to the April lows. So primary wave 4 would, that move would be 38% of the whole move from the lows of 2002, excuse me. So 38%. So what is this going to be? Intermediate wave A? Because primary wave 4 is going to consist of intermediate degree ABC. Is this going to be intermediate wave A? Makes sense to me. Makes a lot of sense to me. So what's our first move? 16,473. Where are we? 24,960. We're talking a 8,000 point move. 8,000 points. How much have we gotten to? Now, I want to show you one little stock that is, I don't know if it's actually in the NASDAQ, but it is trades on the NASDAQ composite. This is Commufault Systems, which, by the way, a law firm has filed notice that if you are a holder of this stock and you've lost money, you need to contact us because they're putting together a class action suit against the company and how they reported. How they, but this is a smaller company, which, let me just take this out. I'm just showing this as an example. This company started their trading in 2006. So, in all intents and purposes, it's not that old. It's 20 years old. And they had a beautiful run. And so on a hope of women in prayer, they were orders until they reported their fourth quarter, whatever the quarter was, but it was the one the latest quarter. And they made an announcement in their uh, after the press conference that the 60% of the orders that they received in the fourth quarter came in the last month. I'm like, oh, okay. So you don't really have a lot of orders. And a lot of those orders could be canceled. How do we know, right? So here we have it. The stock, I got to go to the daily to show it more for you there. This stock back in July hit its high at 200.68. Now this, I don't know what Commvault does, but I'm not going to say they're a huge company. But they started to realize, or traders began to realize, the stock is overvalued. And they said so on this move. But it didn't stop. They made 91 cents. I don't know what the projection was, but here we go. And here we go. And then the latest. Bam, bam. So we're talking about a stock that was trading 200 in, what did I say, July or April? In July of last year, that in February of this year hit a low at 79.51. And it's not over. It's not over. Now, when I talk about overvaluation, this is what I'm talking about. It's not just we're looking at the big boys who actually have orders, but to think we start to see things. So what's going to underpin the underlying strength of whatever we have? Oh, all of these orders, all of this AI, all of this stuff that's happening, it's all going to still be in effect. Really? It's going to shift, folks. It's going to shift. The smaller players, the newer players, I don't know what Commvault Systems does or what they provide, but something about, I'm going to say security. So, but whatever, they're small and there are larger companies that actually probably can provide product quicker than they can. I'm just saying, and let's just talk business for just a moment. I'm not saying that it's a bad company. I'm not saying it's a good company. I don't know. But what I am saying is that I believe it probably got overvalued. And why? Because it got caught up in that whole whirlwind of like AI is going to feed the rest of the world forever. And it doesn't. So when that reality hits, when that euphoria finally goes away and now gets smacked in the face with a touch of reality, like we just went to war. We have an overvaluation problem. We're going to start to see that come out more. You're seeing these large corporations. The biggest one, right? The largest, the top of the food chain in the NASDAQ is NVIDIA, whose earnings weren't bad. But yet the stock from where it was at 203 on Wednesday hit 177 on Friday. That's a big move, folks. That's a big move. Why? Well, options expiration was a big deal of it. But it could also just be, it's like they're going to lose faith in the company. Not that they can't produce, not that they will survive, I believe, but did we over evaluate? Did we overvalue this whole thing? That's the reality I think is beginning to hit. Did our analyst over evaluate what this company actually can physically do in current economic period? That's what I'm talking about and why we're going to get. So here's one that I just pulled out. I wanted to show you an example. Better earnings and everything. But look what it did. It slid from a high at 129.48 to a low of 79. $50. That's huge. Now, if you just happen to own that stock, what do you want to do? You're going to run to that firm and you are going to sue them. So, what I'm talking about here is that what we got going on, folks, is the potential that we start to realize we're overvalued. And we now need to correct that. Oh, I wanted to go up further. Excuse me. I want to go back to here. We're overvalued. So what happens? We go back. We go back. We correct that and we go back. So this to me, this fifth wave, that's the start. We begin to correct. And this level is 16,473. So did we really, what did we get to? 26,165. Wow. Not necessarily 10,000 points, but like 9,600 points. 9,600 points of overvaluation? Maybe, I don't know. But do we see how we can get to that correction? Options trading, overvaluation, longs that shouldn't be held long, panic, all this would just like get me out. Now, let me bring it back down. Let's take a look back at the daily and let me bring it down, open it up a little bit, because here we are. Look at this. NASDAQ, cash. It's clearly 1, 2, 3, 4, 5, 1. This is the one that knocked me, and I thought I got to do this across the board. And clearly 3 up, and we're coming down hard. It was coming down hard, and the bell rang. I think it comes down harder. Now, we don't get to trade, the NDX doesn't begin to trade again until Monday morning. So can we gap? Can we gap down 100? Can we gap down 200? Well, we could. I have no idea what's going to happen, but could it? Yes. This invalidation point remains in place, 23,854. That goes along with if this is going to remain uh, minuet wave 1. I doubt it. That's why I changed it. But let's just say it does. And this, I don't know, by some means of whatever, is wave 2. And this is 1 and this is 2. That would suspect that we go on Monday, we start to rally. We no longer come down. So we have a couple of precursor invalidation points. First one being 24,387. That's this one. We break that, we're going to go, I think. And then the second one is this one where this is wave 4. Now, let me just change this, okay? If we got to move this fourth wave, again, another alternate, I know I've got a lot, but please bear with me. I have to wait for the market to invalidate the move. I don't just determine these things because, well, I feel like it. They have to be validated by the market. And this would, if we break that, first of all, invalidates that this would be a minuet wave 1 and this is a minuet wave 2, and we're going to go higher now. Okay, so, but what if we do come down and we do break that? It does raise the potential that this is minuet wave A of minute wave 4, minuet wave B of minute wave 4, and we're coming down in the C wave, which again could be 1, 2, and then we have a lot more. Now, what's that going to look like? Now, let's just take a peek. Well, the 100% marker is 23,837. So that's just breaking that point. And if it were to hold, well, then it's a big old flat. A, B, C flat. Put the 4 down there and look for the rally. Now, could it do that? Well, sure, it could. We can come down, we can do that, and then suddenly all is okay. We're not going to send any more missiles. We're not going to go anymore. We're withdrawing all our troops. We've reached an agreement. Glory, glory, glory. Okay. So, but if it doesn't, here's our next level. 22,452 to 22,395. 398, excuse me. So, and still be a wave 4. Could then everything kind of smooth out and relax? It could. Is it going to be enough to support a minute 4th wave and a minute 5th wave back all the way to new highs? I don't know. We'll look at it then. We'll look at where everything is, if and when it were to get there. Okay? I'm just giving you what these points would suggest. If we break that point with enough speed and enough intensity, it would validate this a little bit stronger. So breaking here would, to me, knock out this, leave it as a 4, leave it as that, and now we're heading lower. I'm going to take these off. So just back up the recording and go listen again. And then we go back out, and I got to go back out to my 5-year weekly. Then we go back out. These are the primary. Now remember, primary wave 4 is going to consist of an ABC of intermediate degree. So do I think intermediate wave 1 and even intermediate wave A, but I'm going to call it wave 1. And so what do we got? We've got, first of all, we go back out here. See, now this one I don't count. But this one, look where the 4 is. Do you see how clean that is? 62%, 618 on the primary fourth wave smacks that intermediate fourth wave on the nose. On the nose. So are we really that far off in calling this move? No. Off of that high? No. Look how it lines up. So everything else is really an alternate. I'm making this the preferred. It's the first time I've done that in a long time. So let me go back out here. So what are we looking at? This could be intermediate wave A. And it can come down in 5 waves, folks. I would look for it to come down. And that the whole fourth wave is going to be a 5, 3, 5. And we end up here. And we end up down here before all is said and done. And we put in a primary fourth wave. Now, you're going to go, oh my God, that's 14,000 points. Yep, 14,200 to be exact. Somewhere around in there. Can it? Yes. How much time should it take? Well, here's the next thing that I've noticed with everything's quantitative, everything's algorithmically controlled right now. What I think should take because over in the S&P and the Dow, I'm looking for something between 9 and 15 years, 9 and 12 years, somewhere in there. When I look at their primary fourth wave in the S&P and in the Dow, that was 2000 to 2009. So that was a 9-year period that it took to get there from the high down to the low. And in the Dow, it went up and made a new all-time high in the B wave of that primary fourth wave, and then dropped out of the sky in what we call the Great Financial Collapse. So are we going to go back and equal that? Yes, but what's it going to be? The Great Financial Collapse of 2026, 27, 28? I don't know. But here we are, and we're approaching, and there's just so many similarities to the banter that we're hearing, to a lot of different things that are being said about the stability of our market. Now, I think actually our markets should be fairly stable. I believe this because from what I understand, unless it's all been lies, that the corporate base for our indexes, so that these corporations, the larger corporations, have very large cash reserves. So they should be able to continue. They should be able to continue. They're going to have layoffs, et cetera, all that's going to happen. But they should be able to continue, produce product, continue to have a money flow. Now, whether it's going to be reduced, yes. I think just the market will do that. But a lot of damage is still going to occur to the market, period. This is a big correction. And it's correcting all of the ills and the wrongs that were created all the way back to 2022 in this case. And that is kind of where we saw the demand interest rates, cut the interest rates, cut them. And yeah, that's basically what we've seen. Not fast enough, not good enough for the current administration. Why? Because they don't make money. That's it. I need cheap money. It's not what you're in office for, but okay. So the thing to keep the economy going. Now, one last thing to stick on top of this cake called the rally that may die or has already died. What is cutting the cake or knocking the cake to the floor is the debt. $38 trillion, folks. I'm sure it's higher, but that's the last number I have. $38 trillion US debt that is being held by other countries. How much of it's actually within our country, I don't know. But Japan's number one. Number two, I think, is the European Union, Britain, Germany, etc. Number two might be China. Number three might be Eurozone. And then it breaks down from there. But that's how the U.S. maintains. We sell our debt. Why? Well, good faith and credit of the United States. We're the best economy in the whole wide world. We've done the better than anybody else in the whole wide world. Listen to the rhetoric, folks. Is it the truth? I don't know. But the debt, the GDP debt ratio, not cutting it, not cutting it. So when we get a GDP number like we did last week, showing that it was a 1.4% decline in GDP. Oh, well, you know what we're going to get? We're going to get a 21% gain. That's what I heard, literally. And I'm like, do you have any idea what kind of GDP that would create to have that kind of a gain? So do they actually know what they're talking about? I don't know. We give them the credit because they have the position in an administration that they should know. They should know. But somehow they say stuff. I'm like, boy, you don't have a clue. You don't have a clue. So what's really going to come out? The truth. And I think that a decline in the GDP is not good. It does point to the country is heading into a recession. Current administration's going to fight that tooth and nail. He started with the State of the Union address. Nothing but glowing. This is a turnaround time, the biggest that we've ever seen. I'm the best that there's been. This is the strongest economy ever. Bull. Sorry. Why then did the Dow lose 521 points? Why then does the market drop so strongly when it does? Oh, that's all inside trading. That's all this. No, a lot of it is options related, but this is big money being moved around, folks. So anyway, I think that I'm going to keep my invalidation points. We've got markers that if they start to break, which I'm kind of thinking that sometime next week that may happen. May happen much quicker than we think. Outside of this war, I know, you pray for the people that have to go through this, but we have bigger, bigger fish confronting our country, confronting the economy of the United States, and that is entitled the debt of the U.S. being held by foreign entities. I have no idea how much the Saudis own or the other countries in the Middle East, with their sovereign funds. How much do they hold to the United States? How much hold do they have over the United States? Because they hold our debt. Again, it just starts to paint a very cautious picture. What happens if Japan goes, you know what? Okay, we're done. We're having enough problems on our own. We need to get out of that U.S. debt. We'd like our yen back, please. And what happens to that? They have to sell the bond, sell the dollar, buy the yen. Germany or the Eurozone, they need to sell the bonds, sell the dollar, buy the euro. So the dollars could decline. So where's that really telling? What happens then if they're selling our debt, so they're selling our bonds, the yield of the bond is going to go up, the price of the bond is going to go down, and it could go down really fast because who wants to pay that price when we are not going to be able to sustain these. The lower interest rates ain't going to happen. So why am I going to buy that percentage when it's happening in front of my face that the yield just jumped a percentage point or 2 percentage points? Think about it. So again, we have all those things that we're now focused on what's happening here. What's about this war? What's going to happen to the price of oil? Gee, do we think the oil is up $2 on Friday? What happens if we come in and they're at 77 tomorrow or 78 or 80? What happens then? What's the market's going to do if the price of oil goes up 10%, goes up 20% overnight? Why? Because most of it comes through the Strait of Hormuz. And if we're at war with the country that controls the Straits of Hormuz, well, guess what? Maybe they start attacking the tankers and blowing up the oil. Hey, remember 1991, the Gulf War? What did Saddam Hussein do as he was leaving Kuwait? He blew up all the oil wells, all the way back in. Crazy, folks. This is crazy. So again, we don't know, but the market is going to tell you, I'll tell you what, we don't like uncertainty. So they will be making changes to their positions. They will be getting out of stuff. They will be rearranging that gamma more in their favor. So again, one other thing, I'm going to go NDX. I got more to add about how important. Let me just say now before I jump out of this and go into the next one. If you have positions, you are going to have to trade, period. You're going to have to trade. Your positions could be in the Qs, could be in one of the stocks, could be in the NQ, wherever your position is. If it's affected by the NASDAQ dropping and the NASDAQ starts to drop quickly, it's because other algorithms are trading. If you're going to, again, folks, I am not commenting. I am just telling you that if you approach the market through fear, or if you have to stop because why is it going down? How far is it going to go? What am I going to do? How do I deal with this? You've already lost. So all of that should have been decided before you put the trade on. So putting the trade on, I highly recommend that you always have a point where you're going to get out of the trade because it's been invalidated to go in the direction that your trade suggests. So whether you think, oh, it's going to come back, it's going to come back, what difference does that make? So what am I asking? I'm pleading, trade. Make sure you have the ability to trade. Don't let your money just fly out the window, lessening your ability to trade because you no longer have the money. And then you're forced to close because if you have margin, they'll force it. So there's a lot of things. It's like, if you want to be a trader, then please trade. Now, for those of us as day traders, there's going to be a lot of opportunity, but be very, very careful because there's going to be what I call a vacuum. So in other words, we have a lot of strong sellers in. When they're done and they've walked away because we don't know what the next round's going to bring, but somebody comes in or some firm or some market maker needs a big chunk of a future because of something they just had to sell or buy, so they're hedging, well, nobody's there to offer it. You get what I call a vacuum, where suddenly we just had a spike down of a large amount, and suddenly we're up. In the NASDAQ, we could be up 10, 20, 30, 40, 50 points. And I'm not joking, 50 points in minutes. I'm not joking. Algorithms, folks, are what's in charge. Algorithms aren't stopping to go like, do we have any offers? Do we have any bids? Their mission is to just fulfill that order. And if that order is telling me you're selling this many at the market, they're going to go down and hit those bids until they're finished. If their market order is to buy, they're going to buy it until it's filled. And that could mean a 5, 10, 15, 20-point move in seconds. When it's done, suddenly, oh, here comes the next seller. Boom, 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 boom. That's what I see happening. And it's going to be either providing a ton of opportunity, or it's going to steal. You're going to lose. lose big. If you're a futures trader, even if you do have a lot of experience, but you're trading a prop firm money, and so you have restrictions in terms of drawdown. Be very, very careful. The last thing I want to see any of you, because I know how hard it is sometimes to get that account so that you can earn money and take it. So you want to be protective. What you can't be is fearful. What you need to be is smart. And so what I would suggest is understand that if you're trading the mini in either the S&P, the NASDAQ, or the Dow, or the Russell, choose the micro. You can participate and you actually can make good money with the micros. You're just not at risk of blowing your account out. Do not be afraid to get out of the trade. Do not let this other voice come in and say, but it's going to come back. They're going to be okay. You're going to be okay. Because as that order to sell continues to drive the market down another 10 or $20 in the NASDAQ, where if you're in the mini, 20 bucks times 20, it's 400 bucks. That's a one lot, right? So it's all your trading. You want to see how fast that can go? Some of you already know. Okay, now options, there could be a ton of opportunity in the options, and they're going to flip and fly. Volatility is going to fly. So what does that mean? Implied volatility. I mean, lots of premium, but you're going to have to hedge it to claim it because it either can bury you or it'll give you a ton of money. Okay, so learn how to hedge. An option trader, learn how to hedge. Use spreads or use the underlying, whatever it's going to be. Trade wisely. There's going to be a lot of opportunity. Stay clear-headed. Don't be thinking about, why is it going down? How far is it going to go? What do I need to do? Well, you need to trade. So you can pick your points. You have, if you know how to use fibs, put them in here. If you're getting my morning report, you've got the gamma levels for that day. Understand what happens when that gamma level breaks in either direction. What happens? What does the market do? I talk about it. Use them. Okay, let's go down from here. So just leaving it the way it is, because I'm going to repeat the same thing, but in the NDX, we have our markers. I believe it is all done. And we have 1, 2, which means we start by going down on Monday morning in the NDX. We're going to see that in the NQ come tomorrow. And the Qs actually about an hour or two after Globex begins, I think they start pricing and trading in the ETFs. So here are our markers. We have them that if this becomes invalidated and that 4 gets moved over, we've got where that one can come to. So we can play it and you can try it, but see if it's going to be strong enough and they go right through it, then this stays in place and it's the 3rd coming down. All right, let's go over and look at the NQ because I also want to do the Qs after all this. Everything is it's going to be over here, 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 yeah, 5. I want to pull it back over this way a little bit. All right, so this is the weekly in the NQ. I can start with this. Let's pull this down and let's open that. So there is minor wave 4. I'm going to put up, if I have minor wave 5, I want to put our initial minor degree support levels in place. So I'm going to put that and put this up to here. And I'm going to put this in the correct color, which is the minor degree. And we're going to start by putting 3825618, get rid of that, and 1 point, and then, oops, 1.1.618. Okay. So our first move, of course, is going to be from our first line of defense in terms of support comes at this wave 4, which is 24,165. That's that low in the NQ. 24,165. It's the invalidation point, which would suggest either that this is no longer wave 1, which I'm already taken off, or it's wave 4 is going to move over and it's an A and it's a B, and our markers would show pretty cleanly that we're likely coming down to 22,571. If that wave four is going to come over and this wave C is going to be in place, we have to allow down to there. Wave one is all the way down here, 19,386. So it could be a strong enough drop and the four comes over there, and then we'd be looking for a wave five coming all the way up. So understand that if you're going to mark it as a wave four, I want to back it up with we've got some resolution to what's created that drop. And right now, it's a war or, or a war that's not been declared yet. But still, it's a military action and it's going to affect some of the commodities. We got a lot going on that's going to swirl. Money's going to swirl in all kinds of directions. So I would like us to be there to grab it. This is wave four going up. I want to take that off because it would be different. So that one's not valid anymore. This one is valid. And I'm not leaving anything to the upside right now because I'm declaring it done. So if we have, this is our weekly, we have 1, 2, minute 1, minute 2. And we're coming down in a minute third wave. So we can just add the drawing. And we're going to put this guy in, down to there and up to there. What do we got? 100 is 23,385. Oh, that's beyond there. That's where wave three would be equal to wave one. What's most common? 1.618, 22,081. That's below the 382. Wow. See how that can develop? That's a weekly. Let me bring it down to the daily. It's going to have the same noise, right? So again, bringing it here, bringing it up, bring it down a little bit more. Let's put it back up. 3, 4, 5. 1, 2, 3, 4, 5, wave one. I know a lot of people don't like to count, but I didn't break any rules. I did not break any rules. And I've counted it that way before. This is a 1, a BC, a regular B within this wave two, which is becoming more common than you think. So 1, 2, 3, 4, and a 5. Then A, B, C, wave two. This market actually did go and take out that high. How nice and clean. All right. And 3 up. Ugly for a C wave, but I'm going to leave it right there. Because if anything, I can move this around and we have one, I've got 1, 2, 3, 4, 5 up inside here. This is a daily. So you got a lot of move internally. I could break it down, but I'm leaving it just the way it is because I've already done that. So 1, 2, what's it going to look like? We got a third wave. Wave three equals wave one. And I'm always going to be looking for more, right? Because longest and the strongest, we're back to that for the third wave, is 23,385. That shifts that, if it is, and this would just be wave three of C. Yikes. So what are we looking at? 1.618 for all of three or just all of the C? So you begin to see how this is probably going to get invalidated and that four stays there and this stays in place because of the intensity of what this market can do. That's the other thing. I don't know yet. We won't know until we start trading on tomorrow and then Monday. How is this all going to happen? What is going to catch up? News? Yep, sure. A lot can happen between now and Monday morning. A lot can happen between now and tomorrow afternoon/evening. So here's our markers for 1, 2, that's a third. I'm very strong because the NASDAQ actually gave me these confirmations and the pattern was so complete. For 1, 2, I just went, okay, that's it. My choices are very limited. So I went ahead and made that choice that this, that's not what I want to do. That this, no, thank you, is the preferred count. Now, what can break it? Well, that this fourth wave does actually come in. That'll invalidate and put in a fifth wave. But I have to think. Let's see what this is telling me. Yeah. U.S. military strikes on Iran threaten the oil supply and markets brace for volatility. There you go. Likely, see, of course, market players, right? Defense stocks, sure. It's always going to be so weird. Um, okay, so that's what I got for coming down. 1.618 makes sense to me. It's a third wave, longest and the strongest, and it will have more reason to be the strongest. If this escalates any more than it has, if it gets worse, if something else comes in and adds to it, like the price of oil, like the price of the precious metals, etc., more pressure on the dollar will put pressure on this market. Okay. So that's the NASDAQ. That's the futures market. Not that pretty. And if we look down on the hourly chart, you're going to see, let me see if I can open this up a little bit. I got the one, two. Let me open this up as much as I can. There you go. And now bring it up and then take it up a little bit. Actually, it's just too big. All right, so there's the five. One, two, three, four, five. And it's one, A, B, C, two. I know I don't like that either, but I don't have a choice. You cannot count that as anything other than part of a correction. None of this would have been bullish. None of it. This is bearish. So it gets a little bit weird. But I hung on as long as I could until I saw this. So again, even on the inside, small wave one, wave two could be done, right? That's considering like, are they actually going to come in tomorrow morning and pop it up higher first? Ooh, they could. I'd wonder why, unless we already know. Um, so here we are. Same deal. And it really does look like it could fly right, at least down to there, and then fly down to here, break through that. As it works its way down to put in wave A. I don't think it'll be minor wave A. I think it comes down in 5. All right, let's go over and take a look at the Qs, which also tend to agree now. Qs have been giving us the hint because they kept breaking their volatility triggers. They kept breaking through their gamma levels. Now, on Friday, the Qs, let me go up to the daily so I can just tell you what it was. On Friday, the Qs opened at basically 603, high of 608, low of 602.19. So they were very restricted in terms of what I think as hard as they could have fallen. They didn't. I think they're holding back for whatever the reason is. So what we have is where they closed on Friday is 605. The market actually, regular session closed at 607, and then we sold it off in that extra hour or so to 605. Now, within this thing, same deal. Same deal. There's wave 4. Let me see if I can get this open a little bit. I gotta get that, yeah, just like that. So I want to hold this up and then, come on. Wow. All right, so there, as best I can do. Because I want to show that 4. So 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 1, A, B, C, 2. Still as clear as a bell. Bring it down and look at the hourly chart. 1, 2, clear as a bell. 1, 2, 3, 4, 5, 1. ABC 2, and it could have done it already. It really could have. Because if we get weak, look at this. Look what we sold off. We popped and then we sold off. It's going to be interesting. It's going to get very interesting. So I think the Qs, everything is now in alignment and basically giving me the same message. Giving me the same message. So 4, 5, clean. This was an anomaly. It didn't exist. It didn't really go there. I thought I corrected it, but I guess it didn't work on this one. So it doesn't, they correct it, but then they don't hold it because I did correct it. That did not happen. It was really actually much lower. But 626 did trade, but not that one. Not six. What was that high? I did put it in, but it didn't take it away because it's got that high showing, oh, 643.76. It did not trade there. It did not trade there. So weird. Anyway, 1, 2, 3, 4, 5, wave one, A, B, C, wave two. So if anything, yeah, this gets a little bit weird. A, B, C, two. See, also that little irregular in there. Not that high, but there. And then we have 3, 4, and a 5 for 1. A, B, C, two. So it is looking a little bit like we're going to hit the skids. All right, I am going to end it there. Other than I'm going to tell you that I'm interested in the reset here and our gamma levels because what we have is at 600, what's the put wall in the Qs? And we had a lot of play around the put wall last week. And it kept retaking it, kept retaking it, kept retaking it. Right in here was a lot of play around the 600 level. We broke it, we took it, we broke it, we took it, we broke it, and then finally ran it. But I think well, we got close on Friday and we got down to 602 and I thought, okay, they're going to break it, but they didn't. They ran it instead. But I think this one, we could open below 600 come tomorrow, depending on how far down they take that futures market. Below 600, got nothing. Nothing. So I won't know until Monday how this all resets. So again, option traders, from what we can tell, we're not really preparing for a strong downside move. But now we have all the earnings are out. All the Max 7, every last one of them. Played, ran, died. Even Google ran, died, ran again. So everything that we're seeing is pretty typical for when a market tops, drops off, and then they try to race it back. And then it drops again. So it's almost like you say, markets tend to correct themselves twice. They come down in an A wave, they run up in a B wave, thinking it's all done, and then they drop in a C wave. That's the nature of the correction. By the way, if any of you haven't, I'm going to one last time, one last push. 1929 by Andrew Ross Sorkin. Fascinating book. It's all about the 1929 crash, leading up to it, what happened afterwards, what were the thoughts, what was being said, what was being circulated by the press, what was being told by the big traders and the big banks, and what happened all the way up to the total collapse of the market in 1932-33. So, and then of course the Great Depression, which actually was a thought up term. I think it was I think it was the Hoover administration started calling it a depression, and boy, it stuck, and it didn't turn into be less of a blow to the public by calling it a depression instead of something a little bit softer. But it ended up really catching on, and we know the rest of that story. But it's a fascinating book because have big bankers, have large traders, has anything changed? Do we see the administrations really trying to determine what they want to do, how they want to do it, how do they want to spin things? How do we keep people positive? They did the same thing in 1929, 1930, 1931. But that was A wave down in 29, B wave took up to 1931, and then it collapsed again. So we've got an ABC going here, folks, before we get to just the primary wave 4. So we're not quite there yet. All right, I'm going to finish this here. Thank you very much for listening. And please, uh, if you're going to make a comment, don't tell me I'm out of my mind. Don't tell me I ramble. Please just add something educational, contribute to the conversation. I will answer. Have a great weekend.